Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today's Tuesday. It's February 7th. It's about 7:56 in the morning. The market's going to gear up to open up in an hour and 34 minutes to be specific with you. Now, as you can see here, the NASDAQ 100 is up about 40 points. The Dow is down about 50 points. Honestly, the divergence and the fact that they're so opposite of each other is just telling me right now that the market is totally out of balance. And remember what I warned you. I warned you that the Dow Jones is going to be a lot slower to gain or a lot faster to lose because, as I showed most of you, let me just show you where the Dow Jones is. And this is really important for everyone to understand. Look at what the Dow Jones has been doing. This is the 200-day moving average right here, this blue line. Just sideways, doing nothing. One of the reasons why we've been having such difficulty with different type of assets, where tech has been bouncing, whereas QQQ, look at most of the trading action. It's taking place below the 200-day moving average, aside from this little wrinkle right here, which I think we will correct and come back down. But the point is, there's a huge divergence right now between the Dow Jones and the rest of the market. The blue chips are remaining much firmer in light of the uncertainty than the tech sector. But again, I don't think that's going to remain steady, especially with the fact that interest rates are going to go higher, and we have Fed reminding us of that today. Now, in terms of data, we've got Mr. Jerome. I'm not going to tell you what I really think till you reelect me. Powell, wink, wink speaking. And we have international trades and goods and services, which is a fairly big report this week. We don't have a lot of big reports this week. We do have a lot of Fed speakers. Now, we also have earnings. Now, yesterday we had earnings on ATVI, Czech, Cummins, IDXX, on Semiconductor, Pin Interest, Simon Property Group, Skyworks Solutions, Spirit Airlines. Oh boy, this airline, the taxi cab looking airline. Take Two, Tyson. It'll be very important and digested today. Some of those numbers came out before the opening bell. Some of them came out later. Today you've got the big burrito, Chipotle reporting. They're reporting up 59% up for the year. It's a very ambitious expectations. We'll see if it comes through. But you also have Fortinet. You also have FISV. You also have CNC. You have British Petroleum. You have Gartner. You have Hain Celestion. You have Illumina. But you've got Jacobs Engineering, you've got Prudential, you've got Royal Caribbean, VFC, you've got Western Union. So there's a lot of stocks. And tomorrow, Mickey, the big rat, is reporting, or the big mouse is reporting. So you've got a lot of earnings to digest. And while we're doing that, I want you guys to understand that sectors are totally out of whack. I mean, right now, this is worth watching. You got communication services. Communication services went from being the weakest sector to the strongest sector. Look at the 6-month performance, negative 91%, but look at the last month. Really up. Do you think it could stay up all the way up here? I don't think so. Matter of fact, if you look at it, let me show you what I'm talking about. It's right there, right above the 200-day moving average, and it looks like it's going to just come right back down. The main trend is still below the 200-day moving average. Look at all the trading action. This is the first time in not a year. This is the first time since November of 2021 that we've traded above the 200-day moving average in the communication sector. And I'm very skeptical. And look at how overbought we are. So I'm very skeptical we're going to remain there. Look at technology. Just look at this main trend. This goes down and then starts getting choppy, and now look, it's on the way back down. See that? Still, this is the 200-day line, and it looks like it's going to come right back down. Look at consumer discretionary. I'm just going with the main trend. Look at that. Almost there, just a hair. And again, it hasn't traded above the 200-day moving average since March of this year. So it's been a long time, and a lot of traders, they're really geared up for a bull market again. And anytime there's evidence that the Fed is calming down or quieting things down, they bring up this rally, but I'm telling you right now, it's not sustainable. There's not a lot of sustainability there. Industrial, yes. Material, yes. Financial, yes. But communication, technology, consumer discretionary, look at how out of whack they are with each other. Let me show you something. Let me go and take you back 1 year. Let's see if we can go back 1 year. I guess not. Let's see, 6 months maybe? Huh. Let's see if we can go back 300 days. Let's see here. Okay, here we go. Now look at this. Look at technology and consumer discretionary. You see how they're next to each other? You see how utilities is next to healthcare? You see how you got financial, energy, industrial? Totally out of whack right now. Now, you've got communication services and technology. They're related to each other. They got 3/4 of the same stocks. Totally out of whack. So we've got to be very, very, very cautious right now. Now, let's talk a little bit about what to expect today in the market. You got rising bond yields. Interest rates are going higher. Bonds are going lower. We didn't have a chance to sell bonds at 110. They didn't go up that high. Rising bonds are putting pressure on rate-sensitive stocks ahead of key speech from Mr. Jerome, Powell. 3 major U.S. indices under pressure: technology, communication services, and basic material, growth sectors. But basic materials can still grow even if interest rates go higher. That's not a maker or breaker, where technology and communication really can't. Bond yield weighted on technology and other rate-sensitive stocks. Very, very important. Federal Reserve Bank of Atlanta President Bostic said Monday that January's stronger than expected jobs report raised the possibility that the Fed will need to hike interest rates to a higher peak than policymakers had previously anticipated. And then you have Yellen. U.S. economy might avoid a recession with inflation coming down and economy remaining strong. You don't have a recession when you have 500,000 jobs and the lowest unemployment rate in 50 years. I agree with her. To me, that seems like a soft landing, but boy, oh boy, earnings estimates are coming down. They're now looking to be down 2.8% year-over-year decline. That was not the case 2 months ago. Today, all action is watching Federal Reserve Jerome Powell at the Economic Club of Washington for clues about what we're going to do in light of the red-hot jobs report. It'll be interesting to see if he says, well, the job report is just one aspect of it and we've got a lot more to do, or the job report is very pivotal and it's going to make us think twice. I want to see how he rolls today. Europe, they're up slightly as everybody's anticipating the speech from Mr. Jerome Powell later today. In terms of China, again, they're also waiting for Mr. Jerome Powell. In terms of pre-market movers, Bed Bath & Beyond is down 31%. Skyworks is up 2% after they announced better than expected numbers. Baidu, this is big. And remember, this is a Chinese company. They're higher by 15%. They're going to compete with Chad GDP like bot. That Chad GDP like bot is the biggest thing right now in AI, folks. I don't know if you're aware or not, but this thing can do reports for you. I mean, this is like AI like we thought it would be 30, 40 years ago. This is what it's like. I mean, this is the next generation. So you got to keep an eye on that. And then you have Blink Charging down about 6% on negative numbers, and look at all the stocks you have reporting today. So it is a mess. Now, looking at sentiment, and we definitely want to look at sentiment and where the action is. I want to show you how momentum levels are starting to cool off. You now only have 67% trading above the 50-day moving average. Consumer staples is still at 30, energy's at 13, which means it needs to bounce back hard, and I mean hard. Financials are doing okay, but information technology, 82. Communication services, 80. There's a lot of redness in here that I'm seeing, and usually it goes this way. It goes red, 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 red. Remember, 5-day, 20-day, 50-day, 100-day, so it spills over to the right way. Now, what I'm watching for these numbers, the 200-day, to get to the 50th percentile, for the consumer discretionary to get to the 50th percentile, for infotech to get to the 50th percentile, because I think the market is running on empty steam right now in thinking that the Fed is going to start pivoting, and the Fed is not going to pivot. So it'll be very interesting to see, but the Russell 2000 only has 59% of stocks trading above the 200-day moving average. The Dow is at 57 at the 50-day moving average. It's not looking all that great. And NASDAQ is at 64 and 66, and I'm willing to bet you within a couple of weeks, both of these are going to be below 50th percentile. Momentum levels are declining. They are not rising right now. Now, in terms of sectors, I want to go through these with you. Communication services looks like it's going to come down. It looks like it's over. This looks like a capitulation to the upside. I don't even know if it's blowout top, or if capitulation to the downside, blowout top to the upside. Industrial is looking pretty good. Notice it doesn't have these nasty gaps. It looks like it can actually continue moving. Financial looks like it can continue moving. Basic material looks like it's faltering, but I'll tell you, this trend looks pretty strong, and I don't see a blowout top. And basic materials does not have as much sensitivity to interest rates as technology, communication services, and consumer discretionary. It's more of a need than a want, and I kind of like basic materials right now. Energy looks like it's going to start coming back up. Consumer discretionary, see that? Too parabolic, too much, too fast. And I think that'll start coming off, that gap especially. Real estate could also cool off a little bit. Technology needs to really cool off. Utilities looks like it's still coming down. Consumer staples looks like it's starting to gain a little bit of movement. And healthcare just looks awful. Utilities and healthcare don't look good, but I'm telling you, as soon as consumer discretionary stock starts coming down, utilities is going to start looking a lot better because they're defensive. Basically, what we've been seeing over the past couple of weeks is money is coming into the very, very, very speculative sectors aggressively and out of defensive sectors, and we're going to see some undoing of that. Now, let's talk a little bit about strongest stock and the strongest sector, right? Let's take a look and see what's going on here. Let's look at my modified scan, and let's see where the action is right now. So, Lamb Weston, man, look at this healthcare stock. It's bucking the trend. Las Vegas Sands is bucking the trend. Right now, believe it or not, these two stocks are the best performing stocks, Lamb Weston and Las Vegas Sands. And URI, United Rentals, isn't looking that bad either. Wynn is not looking that bad either. Now, you're probably thinking, Roger, you just said that speculative stocks are going to come down. I do believe that. But we still have a very strong trend. So I would take advantage of the trend in United Rental, Las Vegas Sands, Lamb Weston, and Wynn while that trend is still there. Very, 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 very important. Other stocks, Alta still looks pretty good, but be very careful. There's just not a lot of stocks trending strongly. So again, to the long side, Lamb Weston, Las Vegas Sands, Wynn, United Rental, those are looking really, really good. I would be careful of others right now, and I would be very careful with hard tech. Hard tech is not something you want to go with. These are gambling stocks like Wynn right now and Sands. They make money because China is reopening. Where's the other one? Lamb Weston is just doing really good, but even this stock is starting to go sideways, so you got to be careful. Be careful with Lamb Weston, especially after this rise. Stick with the Las Vegas Sands. Stick with Wind. Stick with United Rental. That one looks really good. And there was one more that I liked. Where was it? Coach looks good. Coach looks good. Maybe and be careful with this little dip, but Coach still looks good. Alta looks good. Basically, the going out, all the stocks that looked really crappy a year ago are starting to look good. But again, be very careful and don't outstay your welcome. I would say these stocks are best probably for 3 to 5 day swings. Now, let's talk about the downside. The downside. Generac Holdings, VFC, Dish, again to the $13 level. SIVB Financial, I think, is going to come down. Lincoln National is going to come down. I think all of these stocks are going to cool off quite a bit. If you want more certainty, go with something like VFC. You're not going to get certainty, but something a little more stable that's not in an uptrend. But honestly, I think this GNRC, let me just look at how it looks on a chart. GNRC. Let's see how the trend looks. Yeah. Oh, yeah. Definitely. I think this thing is going to come down all the way to the $89 level. That's Generac. Let's see. There's others. That's GNRC. Definitely. VFC. Let's see. VFC. Oh, yes. All the way down to 24. Yes. Definitely. And Dish. Oh, boy. I think Dish is going to go all the way back down to $13. I'm pretty confident in that. Now, Before I let you guys go and run wild on this crazy, what's today? Today's Tuesday. Have you seen a brand new way to trade, my brand new way to trade? It has to do with ignoring stock's share price and focusing on the option instead. With this pricing mismatch, I've discovered how a tiny little 1 to 2 to 3% move in the stock can move a stock as high as 35, 41, 46, even 60.8% or 60.9% in as little as a few days, sometimes even as 24 hours. No day trading. I call these unique opportunities bargain hunters, and the value they provide is better than anything else I've found in the markets, especially in the last couple of months. Whew! Are you ready to learn more about how to take advantage of this pricing mismatch? You really owe it to yourself. This is the best explanation of how implied or expected volatility can distort the price of an option in light of the stock, restrict your profits, give you excess gains. It's really worth watching and paying attention to. This will change how you look at stocks, and it'll make you understand how implied volatility is valuable, especially right now. Follow the link below. Take advantage of this pricing mismatch. Follow the link and check out this critical briefing before it's offline, before I pull it offline. There's only a day or two left. Don't miss out. And if you don't know where to find this, go to the YouTube Wealth Press channel. You'll find it all there. Have a great day. And remember, you've got Powell earnings and speculative sectors a little bit overbought. Hope that helps. I think I've said enough. Bye, guys. Take care. Have a great day. And post comments and feedback in the YouTube Wealth Press channel. I will respond there. I will. Bye.